Hello friends, welcome to my YouTube channel Make Money Made Easy by Sandeep. So friends, if you have yet not liked or subscribed my channel, so please like. So friends, today I'm gonna discuss with you about investing money in stock markets, how to manage your portfolio, how to invest, where to invest, and when to invest, how much to invest in the stock markets. So friends, it's a big question and it starts if you think properly, then only you will be able to find the answer for this question, that where should we invest and how much we should invest. I have done this pie chart for your financial planning or portfolio management. For an example, if you have 10 lakh rupees, so you can easily divide it into 50%, and around 50% I means 5 lakh rupees. You can invest in fixed assets like property, shops, plots, flats, any kind of real estate. And after investing 5 lakh rupees in real estate, you are left with again 5 lakh rupees. So out of those 5 lakh rupees, you should ideally invest 20 to 25% in debt funds, corporate bonds, or FDRs. In India, FDRs, post office, PPF, these kind of schemes are very popular, so you should go for these schemes only. The third commodity which I have highlighted here is gold. So you must invest in gold, and out of your 10 lakhs, around 10 to 15% ideally you should invest in gold. Gold, you can buy gold bonds, you can buy physical gold, as our ancestors used to give us gifts in marriage like gold jewelry. So this is a kind of investment which you get when you get married, especially girls. So you can buy gold in the form of jewelry. Your wife will be more than happy, and it will be a investment for you also. So I think you must buy gold. I'm not telling you to buy immediately right now, today only, because the gold prices are very high. So after few days, when you feel that the gold prices have dipped a little bit, you can go for buying gold. Apart from that, you must keep some portion of your savings in cash or bank balance, so that in case of any emergency you are able to use these funds without disturbing other assets. So around 5% or 7%, 8%, maximum 10% you can keep it form of cash balance. After that, here comes the important thing, that is stock markets. Ideally, you should be investing 20 to 25%, max 25% or 20%, because stock markets are highly risky instruments, and when you invest, you don't know that whether the stock market will go up or down. So your horizon of investment should be around 10 years. People say 5 years, but ideally it should be 10 years or more. If you are young, you have high risk appetite, you can increase the percentage of this stock markets investment, like you can go for 30% or 35% also. If you are around 25 year of age and you are unmarried, you can go for 30 to 35% investment in stocks. Or think like when you will retire, then you will use this money and keep on investing. You are definitely going to get a lot of money accumulation at the end of the period. Don't think about market crash or what's happening in the markets. Just be careful, choose wisely, because it's really confusing. Many people have invested in many companies, and those companies are either run away or are got bankrupt. So it's really very tough decision to make and to choose between the companies, stocks, mutual funds. Even like in this recent market crash, many of the people who have invested through SIP or mutual funds, they have asked me, many of my subscribers have asked me that they have got loss in their SIP also. So don't worry about it, but you should worry what kind of stocks or mutual fund should be there for investment. So let's see. This is the growth comparison, where I have compared stocks in different kind of market phases. Like there are different kind of markets, bear markets. Then there is a phase where markets are recovering, you can say recovery phase. Then there are normal markets. When it's a normal phase, then there are bull markets. So when the markets are in bear phase or bear markets, like recently market has crashed, and I think the stock markets have entered a bear market you could say that it's a start of a bear market. Ideally, bear markets last for sometime 6 to 12 months, sometime 12 to 18 months, sometime 2 years. But these markets are really good for the investors who want to invest for the longer period. So in bear markets, you could see here, this is the Nifty. These are large cap stock funds highlighted in orange, and these are mid cap stocks. So it's been found that large cap stocks have performed very well during the bear markets also. If like Nifty give you around 4% growth or return on investment, you get around 5% on an average return from large cap stocks, and you get around 3% of return on investment from mid cap stocks. That I'm taking a median. Many large cap stocks have given higher return, many mid cap stocks have given higher returns. Ideally in bear markets, you should go for large cap stocks or large cap mutual funds, blue chip mutual funds. Then when the markets recover after a bear market, it's been seen that Nifty gives you around 15% on an average per annum return on investment. Large cap stock gives you around 18% return on investment, and mid cap stocks give you around 25% return on investment. When the recovery phase is over, then it consolidates. Markets normally consolidates, and it's called a normal phase of markets, you can say. In these kind of periods, markets, or you can say Nifty, gives around 10 to 15%, so median is around 12-13%. Large cap stocks give you a return of around 15% on an average per annum return, and mid cap stocks give you around 20% of return. Then there are bull markets. When markets are running, there is a euphoria of buying in the markets, and people are buying. So in those kind of days, Sensex or Nifty or any index, they give 18 to 20% return, but I have taken a median of 18%. And if you compare it with large cap stocks, so large cap stocks give you 22 to 23% on an average return on investment per annum, whereas mid cap stock give you around 30% per annum return on investment. So I am again and again telling you, or this graph is also showing, that mid cap stocks outperform the index and large cap, but not all the mid cap stocks. Currently the market scenario is like that. It's very tough to find a mid cap stock which will perform in long run, and markets are currently entering into bear phase. So I would say you stick with the blue chip funds or large cap stocks. When this bear market will be over, then you can go for high quality large cap stocks, and you can mix with some high quality mid cap stocks. I am again putting emphasis on high quality mid cap stocks, not all the mid cap stocks, high quality mid cap stocks. So friends, if you invest for longer period of time and you get 25-30% of return of investment per annum, you can multiply your money without doing anything in 10 to 20 times or more, sometime in 100 times also. I will tell you few stocks who have outperformed the market and multiplied the money in 30 times, 100 times, and even 1000 times. So watch for my next video, in which I am going to tell you about which are the top stock or best stocks to invest. And if you have still not liked or subscribed my channel, please like and subscribe my channel so that you can get my next videos. Whenever I launch a video, you will get the notification. So once again, thank you very much for watching this video.